Your overtime check is short, not stolen. Short. Payroll is sitting on money that belongs to you right now, and nobody at your job is going to walk over and explain why. And that new law everybody's talking about, the one where overtime is supposedly tax-free now, that one's real. It's just not what the guy at lunch told you it was. So let's put an actual check on the table. $28 an hour, 10 hours of overtime, and let's find out exactly what's yours.
There are two things said on every job site in America, and they're both wrong. The old one, don't work too much overtime, it all goes to taxes anyway. The new one, overtime's tax-free now, go get it. The first one is costing guys shifts they should have taken. The second one has guys spending money that was never going to show up in their check. By the end of this, you're going to read your own stub better than the man who keeps explaining it to you.
Here's our guy. $28 an hour. He worked 50 hours this week. 40 regular, 10 over. Regular pay is 40 hours times $28, $1,120. His overtime rate is time and a half, so 28 times 1.5, that's $42 an hour. 10 of those is $420. Gross for the week, $1,540. Now hold on to that $420 because there is a brand new tax break for overtime, and it does not apply to that number, not to that one. We'll get there. First, the stub. He looks at it, and the withholding is bigger than he's ever seen. That's where the myth gets born. Here's what actually happened. For withholding purposes, that check gets annualized. The system takes the check in front of it and figures the tax as if checks that size keep coming. $1,540 times 52 weeks, $80,080 a year. So it withholds like an $80,000 a year man. Run that same math on a normal week and you get $58,000. Same man, same job, two completely different assumptions about him, 2 weeks apart. That gap is the whole myth. Your overtime didn't get taxed harder. Your one big week got treated like a whole year of big weeks. There is no overtime tax rate. There's no special bracket for hours over 40. Overtime is wages. Wages are wages. And the money isn't gone. When you file, what settles your bill is what you actually earned across the whole year, not a guess made off one big check in March. If more came out than you owed, it comes back to you. Bigger refund or a smaller bill if you owe. That heavy withholding didn't create a new tax on your overtime. It was withholding.
Now here's the part that matters more than the tax lesson. Guys turn down shifts over this. They genuinely believe the extra hours push them somewhere they walk out with less. That has never once happened to anybody. Your take-home on an overtime week is bigger than your take-home on a straight week every time. Say you passed on those 10 hours. $420 gross, gone. Now that $420 isn't $420 in your pocket, but it's nowhere near zero. After federal withholding, after Social Security and Medicare, you're right around $300, a little less if your state takes a cut. That's a car payment. That's most of a month of groceries. Turned down over something somebody half remembered. I want to hear these. What's the worst overtime myth going around your job site? Put it in the comments. Not the mild one, the bad one, the one that's been passed down since before you started. All right, myth number 2. This one's newer, and it's got a piece of truth buried in it, which is exactly what makes it dangerous. There is a real law. It's called the No Tax on Overtime deduction. It runs from 2025 through 2028, and it's on the books right now. But a deduction is not tax-free money, and that difference is your whole misunderstanding. Tax-free means you earn $1 and you keep the dollar. A deduction means you earned it, tax came out of it, and at the end of the year, you get to knock some of it off your taxable income. Nothing changes in your check on its own. Hold on to that, because there's a way around it, and I'll get to it. And here's the part I told you to remember. It doesn't apply to your overtime pay. It applies to the premium, just the premium. Think about what time and a half actually is. $28 of it is your regular rate. That's the money you'd have made working any other hour of the week. The extra $14, that's the half. That's the premium. That is the only part the government is talking about. So our guy, 10 hours of overtime, $14 apiece. His deductible amount for the whole week is $140. Not $420, not $1,540, $140.
Run it out for a year, same 10 hours every week, 52 weeks, $7,280 of overtime premium. That's under the cap, which is $12,500 if you're single, $25,000 married filing jointly. So he keeps all of it. At his bracket, 22%, that deduction is worth about $1,600. Real money, nobody's arguing that. But look at what it actually is. $1,600 spread across 52 weeks is $31 a week. And by default, you don't see a dime of it until you file. So when a man tells you overtime is tax-free now, what he means, whether he knows it or not, is $31 a week, paid to you next spring. Now the fine print, because this is where people find out they don't qualify, and I'd rather you find out from me. It only covers federal overtime. That's the Fair Labor Standards Act, hours over 40 in a week. If your overtime comes from your contract instead, daily overtime past 8, doubles on Sunday, premium for a call-in, that pay is real and it's yours. It just doesn't count for this deduction. Same if it comes from a state rule instead of the federal one. Social Security and Medicare come out of every dollar, including the premium, 7.65%, untouched by any of this. Your state may tax the whole thing too. If you're married, you have to file jointly to take it. It phases out above $150,000 of income, $300,000 joint, and it expires after 2028 unless Congress renews it. And now the part almost nobody is telling working people. You do not have to wait until April. The W-4 changed, the one you filled out your first day and never thought about again. There is now a deductions worksheet on it where you write in what you expect your qualified overtime premium to be for the year. Our guy writes $7,280. He hands it to payroll, and payroll is required to use it. His withholding drops on the next check. That $1,600 stops being a lump sum next spring and starts riding home with him every week. Same money, same law. He just quit lending it to the government for a year for free. 2 things before you go do it. Estimate honestly. If you write down more overtime than you end up working, you'll come up short at filing and owe some back, and that's a rough surprise. And check your W-2 in January. For 2026, your qualified overtime should be reported in Box 12 under code TT. If you worked overtime all year and that box is empty, that's a conversation with your payroll office, not a shrug. So, here's where we landed. Your overtime is not taxed at a higher rate. It never was. Any shift you turn down over that story cost you real money for nothing. The new law is real, but it's a deduction on the premium half, worth a few hundred to a couple thousand a year depending on your hours, not a tax-free paycheck. And you don't have to wait on it. You worked those hours. You gave up the evening, the Saturday, the kids' game. The least you can do is know what came home with you and why. Go get your last stub, find your overtime hours, and turn in a new W-4 this week so that money starts coming home every Friday instead of once a year.
See you in the next one. Let's build some wealth.